And we are live.
Hi, everyone. I don't know if I'm the echo. Can you hear me in echo? Hi, everyone.
I'm hearing a little bit of an echo, Anne-Marie. I'm not sure if you're sharing your audio from your stream, but I can hear you here. Do another quick audio test. Check, check. Can we hear us loud and
Testing
clear?
1, 2, 3.
Yep, sounds good to me.
Testing 1, 2, 3. All right. Okay. Here we go. Today is
September 21st.
What is today? So much.
September 21st. Only way I know, Anne-Marie, we have to start the show off. Sorry, guys, if we're starting a little bit late. I'm going to take the blame for this one. Today was my mom's birthday. I was out celebrating a little bit and came back a little late to the stream. Also want to say happy birthday to Mohammed. Everyone who knows Mo and loves Mo on our stream. Today is Mo's birthday as well. So Mo, if you're watching, hope you're not. But happy birthday, Mo. Happy birthday to Mom. Happy.
That's very cool. All right. So now that we're taking a look at the markets, I did want to talk about something I saw really interesting at the middle of the week. Before the Fed meeting, it was like a Monday or something like that. The institutions had hedged with a ton of negative gamma. And so they had all these options way down on the bottom, and they had a call wall that was really low. The Fed meeting came out, and in that one afternoon, they flipped. And so they went from significantly negative to neutral to positive gamma. And so for us, that means that, you know, they're positioned to run a fair bit higher. Although my head is thinking, wait a second, shouldn't we take a breath? Institutions are positioned higher. What do you think about what you saw this week, how it transpired, and how did you navigate the markets this past week?
So overall was a green week for me. I think I traded pretty well, read the markets pretty well. I think I felt like it was an easier week to define some levels. We were kind of waiting for the rate cut. So Monday, Tuesday didn't do a whole lot. But then Wednesday, after the Fed announcement, I did make some trades in gold and the equities that turned out pretty well. And then I think that kind of helped frame the rest of the week because we traded, at least in gold, we traded inside of that Fed announcement candle. And in the equities, we saw we kind of continued to push using that Fed announcement candle as a support. So, turned out to be a green week overall. I think I was trading a little too aggressively in some cases where I probably could have ended the week a little bit higher, but gave back some profits. But overall, a decent week. And I think we see more of the same, right? These markets are continuing to push all-time highs. We push an all-time high and we sell off a little bit, but good news, bad news, no news. I think there are buyers in this market.
Yeah, absolutely. The pervasive bid is key there. It really, really is. The question is, how do we deal with these wicks that come in if we're looking to manage our risk in a Topstep combine, XFA, or live? And so, my thought has been just be wrong in a hurry. Don't be wrong for a long period of time, or leverage in because you think it's going to hold a support level. And so I think that's going to be important for this week also. What would you add to that?
I For me, it really is just take every day as its own thing, right? I'm kind of leaning towards the long side if we're talking about equities, just because of if we look at a higher time frame, they continue to go up. With that being said, I think for me, where I find the most caution is making sure if I'm buying that it is on a pullback, just because that's kind of been necessary, right? We saw Braden on Thursday this past week, buy all-time highs as the market was pushing. But to me, that just, I don't have a real process to do that. If I see the market continuing to grind up, for me, my goal is to measure a pullback and then leverage into that pullback once we get it right. I've really been using micros to kind of scale into positions, just not putting leverage up front right away,
Uh-huh.
because I think what happens is these pullbacks are natural, right? They're, anywhere from
Yes.
40 to 50 points in the NASDAQ. And if you put all your risk up front on some of these trades when the market's kind of reluctantly making all-time highs, uh, and you get stopped out before the market ultimately goes in your direction. So I'm approaching these markets with a ton of patience, but at the same time, knowing that they're presenting opportunities, I'm not really looking to fade the move, but looking more so as any healthy pullbacks as opportunities to get in with the trend. And of course, we could say all of that. A headline comes out this weekend and everything changes.
Absolutely. I mean, it is what it is. Anything can happen. So the only thing we have control over is managing that risk. So I heard you say something super important, and I want to give the traders a review of that so that they can understand how to move forward when they're taking a position. And so you said, hey, waited until after the Fed, but then used that Fed release candle to keep it as a breakout zone. So the the release candle had less volume than the actual 230 candle
Right.
when the Fed began to speak, when the Fed chair began to speak. So what candle did you actually use and why did you choose it?
Great question. So let me switch over to my charts really quick. And
Yes,
what Anne Marie is
please.
talking about here is, so this is the Fed candle here. This is 2 p.m. Eastern time and 2:30 Eastern time. We know when the press conference is going on. Of course, the questions come out. What are you guys looking forward to doing? In the future, how many rate cuts are we going to get this year? So really, Anne Marie, I use this entire zone, um, because
Gotcha.
it's all of the volatility, right? So everything, the response to everything, right? The response to the rate cut, the response to the press conference, it's all tied in there. Now, if we can look the 2:30 candle, 2:30 Eastern time, there's that high there, 66.75 in the S&P. That was a level I was looking at kind of all week. And we can see tested down to this area 66.80, 66.75 a couple of times. We
Mhm.
framed out the high and we can see how many times we tested that 66.87 level, right? So just this general zone, looking for and it's not just a tap into the zone, right? It's, let the market trade into that zone and then show a reversal pattern on a shorter time frame, right? So, we trade down into 66.80s. I'm looking for a 3-bar reversal on a shorter time frame as the entry signal. I'm looking for that volume exhaustion where sellers have to bring it down there, but do they gain enough traction to continue selling through this area? And we can clearly see they didn't, right? So anytime you call this supply and demand, support and resistance zones, whatever it is, anytime we identify these zones, it's identifying the flow into the zone, and then once it stops, then trying to take the trade in the other direction.
Excellent. All right.
We are
So
open.
yeah. What is the time frame that you're looking for the shorter cycle for the hold?
So for me, once I identify an area, then I'm going down to a 3-minute chart and just
Okay.
looking
Always
for
the
an
three.
entry signal from there. Usually, what that looks like is some type of high volume reversal. So
Mhm.
here, this candle here, right? This is 9:45, and I'm using the 9:45 candle because we already know that 9:30 Eastern time, that's the market open. It's always going to be high volume. Outside of that, I'm looking for an anomaly, and this candle is the highest volume candle of the day. We close above it, and now this is where I want to start to assume some risk, right? Because sellers tried to push this, they met some buyers and are pushing us higher. So that's where I'd look for on a 3-minute chart. Traders, you can use a 5-minute, whatever shorter time frame. I probably don't go any lower than a 3-minute. On occasion,
Gotcha.
I will, but yeah, more often than not, I'm looking at 3-minute candles, how that volume trades into a demand or supply zone, and then once it reverses, and I'm usually going to wait for a candle close over a high volume candle in a shorter time frame because that just gives me confirmation that we're done at least in that short time frame trading in that direction.
Okay, gotcha. So we did start,
Hmm.
and my thought is that we should have a little bit of an arguing in the ES um, into maybe the open of um, the last 30-minute candlestick of the day or the
Okay,
close. Yeah,
let me trade. Let me switch over to your memory.
yeah,
Yep, we got
I,
your screens up now.
yeah. I think that's fair. See what happens there. So I have a short set up at 67.21 because I'm using the high volume candlestick as the anchor of the motion. So we opened below the low of that big volume candle. And so if we can't get up over the close, then we should move into, the top of the first 30-minute candlestick formation. So that's my thought in terms of price action. I don't want to miss this trade, but I also don't want to rush it.
We did just tag like 21 half there, 21 quarter.
Oh,
Yeah.
gotta hate it. Story of my life. Okay, so let's take a look at a couple of the other instruments and see what's going on. Are you still trading? You trade the NQ, right? I thought you broke
Yeah,
up with them and then you
yeah.
started
I
start a new
I
relationship.
did start trading the NQ again when the daily ATR came down to a
Okay,
reasonable amount where we're not seeing 200.5-minute candles. Yeah, I'll go back to the NASDAQ, but so now I think it's nice market to trade.
okay, cool. So are you seeing anything in the setup here in the NQ?
Let's take a look. Take a look. I'm going to switch back over to my charts really
Sure.
quick. And, another market that's continuing to make all-time highs. We're less than 1% off of 25,000 in the NASDAQ. We could be trading 25,000 this week, right? It could
Oh,
be as early as
easily,
Monday,
easily.
depending on how these markets want to trade. We do have some news later in the week. I know we have PC at a GDP number on Thursday. So there are some potential catalysts later in the week where we might see consolidation until those come out. But I'm looking again to try to buy this market. So kind of looking at the daily, one of the things I've been doing is just mapping out the daily high, low, and 50%. And when we start to trend, that 50% area is a decent spot to look for opportunity, right? We can see it on Friday. We pushed down into about 50% of Thursday's range, and we found some buyers there. So it's kind of how I'm looking at today's action as well. 24,773 is that 50% mark of Friday's candle. Just looking to see how we respond to there.
Say that number again.
24,773.
Okay. Yeah,
So
I remember that number.
yeah, just looking for maybe a little bit of a pullback into there if we start to see a reversal pattern. For right now, am I seeing a trade? I usually like to wait for that first half an hour to play out unless we
Mhm,
get a market that's just screaming to the upside or downside right away. But what I'll
mhm.
do, Emery, is map out that high and low of the first 30-minute candle. Kind of looks like it wants to push lower right now. We're seeing a decent push, and then I'm looking for VWAP to go with this price action. Right, the one thing I feel about the Globex Open right this time, it's such a thin market that
Mhm.
you're going to get price action, but is it price action that you can trust the
Exactly.
move, right? And you know, sometimes I'll see the market go, and I'm just like, there's no volume behind that move. that trade is just isn't for me, right? But if we get VWAP, which is this blue line on my chart here, actually we'll change it and make it a red line. This red line on my chart, if it starts to leave this red box with price, then I'd be more inclined to look for price action to trade lower back down to these 775s. That doesn't mean it's a trade, especially because I'm looking to buy this market. But if the flow is to the downside, right? Price is going, volume is going, it's telling me that I can't buy it yet. So if I'm going to take a short, looking at the higher time frame, it's, you know, reasonable expectations on a short, right? We've gotten 50-point moves to the downside in the NASDAQ, maybe sometimes 100 points. But I'm looking at this as, is this a better setup for the eventual long that this market's going to present?
Yeah, I agree. So if we could look at the queue on my screen or something. So here's the highest 30-minute candlestick towards the close of the day. Yeah, it's 3:30 Eastern time. And so this is a place that the traders normally come in and bounce off of, right? It's the bottom of that high volume area. So if I were taking a long, that would be the space that I would look at it. If it would come in, touch it, then bounce, you know, like it's doing right now. So but that's what I was looking for. And it can't get above the close of that last 30 minutes of the day. It's going to trigger a short to me. Notice how we opened up down, we tested settlement and immediately rejected it.
Yep.
And so thanks to the Topstep team that gets these Topstep levels every day, they're just fantastic. And they're doing a great job here. So you want to look at gold?
Yes. Yeah. Gold is a real interesting market right now. You know, I think, and we've been saying it, that I think personally gold is probably the best trading market we've had all year. Just even when we see it consolidate on a higher time frame, it's presenting a ton of opportunity. We have your charts up here now. I can switch over to mine.
Take over. Yeah, take over.
All right, let me switch over here to gold. So taking a look at the daily first, what we have, I'm looking at this September 9th daily candle. This has been the candle that I kind of framed the last 2 weeks around. Why this candle? It was the highest volume candle we had pretty much all month, right? We had to go back, what was this? We had to go back 20 trading days for another candle with that much volume on a daily. And we can see how the market responded to it, right? 36.63 was the low. So every time it came down here, I'm looking to buy gold. 37.16 is the high of that candle. And we can see every time we pushed above it, there wasn't a lot of follow through, right? We did make a new all-time high, 37.44s. So right now, what I'm looking at is how the market responds to this range. Really nice close on Friday, right? We closed above the range. 37.16 was that high. If we can continue to push, then I'm looking for a push to all-time highs. If we don't get any volume to support this move, I'm looking for gold to kind of fall right back into this range. It's a 50-point range that's been presenting a ton of opportunity to us. And, you know, gold went on a rally for 2.5 weeks, maybe 3 weeks of just straight up price action. So, and that came out of a 130-day consolidation. So I'm not surprised to see the market consolidate a little bit. Is this enough consolidation to, you know, build, you know, accumulate a position for that next leg up? We'll see, right? If the volume starts to trade higher and just pushes higher, maybe. But, you know, go ahead, Mary.
What kind of volume are you looking for?
Great question. So what I'm looking for, if I go down to a 30-minute chart, let me look at let's look at one of the prior days. We'll take a look. So here is September 11th, last Tuesday, right? So we see, hold on one second. We're going to put the session breaks on here. All right. So this is, here's a full day of price action, right? And we have volume kind of hanging out below 50%. Price tries to go up. but volume doesn't go with it, right? And when I say volume doesn't go, it's this VWAP, right? I need to see VWAP start to leave that range. Here's another day, right, where we had price trade above the range. But if I attach a VWAP to the beginning of that day, VWAP stayed in the range. What does price end up doing? It falls back into the range eventually, right? So what I'm looking for is on any time frame, really, and we can start it. We can start it today. I'll attach a VWAP to this opening candle. As long as this stays above this 16 price, then I'm looking to take a long. If VWAP flattens out and price trades higher, I'm just looking at that as eventually the market is going to come back to where volume is, right? And we see it happen all the time, right? Mean reversion traders look for extensions away from volume to then trade back to it.
I
So
was just going to ask you about whether you anchored the VWAP or not, because it feels like that VWAP is moving pretty slowly. And so anchoring it might give you a little bit of a jump start on the trade. So where would you anchor it?
So if we anchor to the last aggressive move that we had, so there's a couple of spots that I'm looking at, Emery. One is the Fed, the Fed rate decision, and we can see where that VWAP is from that point. It's in the middle of this range. A second spot that I'd look at is if we start to see any aggressive volume coming in for the day, right? So if we look at Friday 9 a.m. Eastern time, we got a push of volume, but even then, price went above the range, volume didn't. So that kind of just tells me when we get up above 3,700, 3716s, can price trade up there? Absolutely. Can I take a trade in that direction? For sure. But in order for gold, kind of looking at it at a higher time on a higher time frame basis, in order for gold to make that next leg up, volume is going to have to start to trade outside of this range, right, to push us up. So I'll take yep.
No, go ahead. I'm sorry.
No, I'll take a trade in that direction, but if I don't see volume leaving this range, I'm more inclined to take shorts when it does set up.
Okay, so that was actually my lead-in question. It feels like you're thinking that this is going to stay a little range-based or come back into the support zones. Yeah.
Correct. Yep.
Okay.
Yeah.
I feel the same. I feel the same.
If we don't get a push early, and it looks decent right now, right? If we're since we've opened, and I mean it's only been 13 minutes, but since we've opened, volume is flat. So in order for me to trust this trend, and I'd probably look at gold a little closer to the Shanghai Open, which is 9 p.m. Eastern time, right? Let's see what that volume says, right? If they decide to push, then I'll go with them. But if they don't, and they just let price trade higher, they probably don't care too much to continue buying higher, and then we may see that reversion back into this support here.
Okay. All right. So let's take a look at micro Bitcoin.
Right. I'll switch over to your charts.
So this is another reason that I suspect that gold might have a little bit of a pullback coming, because these two instruments have been viewed as stores of value.
Right.
And they've been running hot. And I think Bitcoin sort of catches earlier than the others in terms of forward drift. And so this one's really pulling back. I mean, let's take a look at a daily here.
Daily
all right.
Bitcoin.
Yeah. So we had a pretty good move on Wednesday, and we're still inside of that candlestick. So my thought is, if we get out of that candlestick, we'll try to pop back in right away. And if we can't, we're going to start, where would be the next big one. Yeah. I think we test this volume candle that's down here at about 114,000, and that's going to give
Okay.
us our next range,
Yeah, I can see that.
right? And so if folks like trading Bitcoin, the key thing to watch right now, if we look at, we're building our first 30-minute candlestick rate, you can see that it looks pretty bearish, right? The last 30-minute candlestick, the high of it is 115,975 or something like that. And the low is 150,220. So the traders are going to try to buy the floor right here. It's just what they try to do, especially since we've got a support structure sitting pretty near this low, right? So we have confirmation on a big fat candlestick that goes all the way up to 116,650. How many folks in the chat trade Bitcoin?
That is a great question. Who in the chat is a micro Bitcoin trader or even a micro Ethereum trader? Micro Ethereum has, over the past month or so, I don't know if anyone's been paying attention to crypto, but micro Ethereum had about a 2-week run, Emery, where it was consistently the highest percentage mover on all of the Topstep markets that we can trade. It's kind of calmed down a little bit recently. It's ranging around a little bit here. Tin in the chat says only NASDAQ. That's not too surprising. Jeffrey says, I watch it on the weekend. I think we are shorting on Bitcoin. I always watch it for layup trades. That's Wyatt. So we got a couple people looking at it, not futures, but I trade leveraged Bitcoin, ETH, and Solana. That's Joby. Take a look at it, Mike. Emery, I think micro Bitcoin is probably, Coach Paul says this all the time. If Bitcoin rises to, 250,000, 500,000, that futures contract is going to be one of the most, it'll be the NASDAQ when that happens in Bitcoin, I think.
Yeah, I would not be surprised. I did not even know we could trade micro ether.
Oh yeah, it's it's an interesting contract because
Wow.
it's 5 cents a tick.
Interesting.
So micro Bitcoin is 50 cents a tick. That micro Ethereum is 5 cents a tick, which on consolidation days, you'd be hard pressed to find $100 out of a trade there. Maybe you have to over leverage a little, but it could be a good market to practice on, right? Have some skin in the game.
Yeah.
You probably shouldn't blow an account trading micro Bitcoin. I would say probably that's kind of a disclaimer because anybody can do. I'm sure if I challenge someone to blow an account trading micro Ethereum, they could do it. But
absolutely,
it's a reasonable market as far as risk goes to trade Topstep accounts.
All right. Do we want to look at oil or what would you like to look at?
So I do want to take a look at the NASDAQ again here. Give me 1 second. I'll switch back over to my charts.
Yeah. I am in this long triggered at the bottom of the range. So
S&P long or the NASDAQ long?
NAS. The NAS.
Okay. Got you. So just kind of taking a look at the NASDAQ again, looking for potential pullback opportunities. Looking at those 755s maybe down here. This VWAP is starting to leave this first 3-minute range to the downside. Now, I usually wait for a 30-minute candle to close, but this is now telling me that pullback maybe is a higher likelihood because that volume is starting to leave this range as well. I like where'd you get in long?
I got in long at 24835, the low of the last 30-minute candlestick yesterday, Friday.
Got you. Okay. 835. I got you. Yeah, I really like 755s down here. Yeah, just kind of this is the first time I'm looking at the charts. Normally, it's a lie when I say that, right? I'll take a look at the charts, giving giving everybody a little insight. There's usually at least an hour where I look at the charts, but this is the first time I'm looking at the charts this weekend. It's just been a pretty busy weekend overall, but yeah, I'm kind of doing a little bit of my homework for the opening call tomorrow,
Yeah,
seeing where we could potentially pull back to.
for me, I have to disconnect from the charts or my brain turns to cottage cheese. I have to disconnect. It's it's just required. I used to not, but in my advancing years, it's now
Fancy years. I like that. I like that term. Fancy years. That is a great
advancing.
advancing
Advan-
years. Okay,
I could
advance.
call them fancy. I
I,
could call them fancy. That
Emery,
sounds
I've
better.
heard some of your vacation destinations. I would definitely call those your fancy as well.
Yeah.
I'm still trying to figure out how I get invited to a trip. But
Listen, always ruin my suitcase for you. It is 69 below zero in the cargo hold.
fancy years, for sure. But yeah, I agree with you. Right, it is necessary to get off the charts. Just kind of experience life outside of the charts and kind of separate from the decisions that you made last week. Right, we want to review them. Coach Paul and I always say it. On when we do at the buzzer on Friday, take an hour to review what you did for the week. But really, no more time than that. Especially if you have, whatever your trading plan is. Staring at 10,000 more charts isn't going to help you execute better when the lights turn on, right?
100%.
And I think trading in the zone, Mark Douglas says it, right? Everyone has probably more than enough information than they need to make a winning trade. The key is executing when it presents itself to you. And I think
Yeah.
that separation from the charts helps with that execution.
Yeah. Well, we get mental fatigue.
For
And
sure.
I think that's something, I don't know if traders take a look at their stats and say, hey, I trade better in the middle of the week, or I trade better at the beginning of the week or at the end of the week. But if you spend 6 hours just locked in, you're going to get tired. And mental fatigue really needs a reset, or you're going to be just more susceptible to being exposed to fear, fear of missing out, um, impulsive motion. All of that has a stronger foothold on our minds if we have mental fatigue. And so, I tell traders, hey, listen, if you can get 40 minutes of really good study time, it's worth more than 6 hours of staring at the charts.
Agreed. Yeah, I agree. Um, you're probably going to review the same thing over and over again. And I think for me, and I've done it. I think we've both probably done both, and we could speak from this experience, Emery. Um, when you overanalyze,
Oh,
it it you just
torture.
freeze up in real time,
Exactly.
right? Where it's just like, hey, I've identified the perfect scenario, right? Nothing can go wrong scenario. So now when the market is presenting information to you in real time and one thing even slightly has you doubting the information that you see, it's hard to click the button.
Yeah.
So it's
Yeah.
trading really is about kind of being in flow with the markets, and just like an athlete really shouldn't be doing too much thinking, I think,
Exactly. Yeah. Yeah.
when it's time to trade.
Yeah. Yeah. I think, too, a lot of traders are so afraid of being wrong.
Yep.
I mean, we don't want to take trades when we're alive and be wrong, but
Oh no.
I mean, it happens. It is. It's just, it's a game of numbers. and the number you have to manage is risk. So don't let being afraid to take a trade take you out of it, right? Because you probably are overthinking.
Yeah. Yeah, definitely overthinking. Definitely overthinking. And it should just be one data point, right? I think what happens is traders over
Yeah.
leverage, and then you can't afford to be wrong. And that's
Yes.
when it gets a little scary. But
So true.
yeah, cannot overthink. I was just talking to my brother, my older brother's here. He started coaching my niece and nephew in soccer, and kind
Nice.
of going through that. They're 6 and 7 years old, or 7 and 8 years old, and he's
It's
just
like
like
herding cats when
like
they're
herding
that.
cats, and you don't depending on where you are in your trading journey, you don't or your soccer journey, you don't try to be right so early, right? You
Exactly.
just try to learn, try to make mistakes.
Yes. Just get a feel for things. Exactly.
You're seeing gold push here. I think I'm seeing all the other metals. Let me switch over to my charts real quick.
Oh, yeah.
All of the other metals are kind of pushing right now. We got silver on its highs. Silver already up about a 1 1/3% from settlement. Platinum on its highs as well. Silver is highs of the year, and I kind of feel like gold is doing that move right now. And I'm gonna wait
Mhm.
a little bit, just kind of setting the tone for what's gonna happen later in the day. Maybe if I come back and trade the Asia session, we can
Mhm.
see, if I map out this first 3 minute candle, right? We're still waiting for the 30 to close, but this first 3 minute candle volume, which is this red line, is
Mhm.
starting to leave that range a little bit to the upside. So any pullbacks here, I may be looking for opportunities to get in long gold. Again, anything we say here is for educational purposes only, not for any trading or investment advice. Um, but gold looks like it may be ready for this next leg. Do you trade gold often, Amber?
Not often, but
Okay.
I do. I do trade it. I try not to overthink gold.
Mm,
Um, oh, I just got stopped out. It just gave me about 18 ticks.
okay.
So um, I'm going to wait to see if it double bottoms and runs back up. I think it might. Um, but yeah, for gold, I have trouble when I have a real bias. I'm like, uh, I'll just trade my bias. I can't get out of my own way. So when I don't have a bias, love trading it. When I do have a bias, it's bad. I get taken to the woodshed all the time.
Yeah, I hear you. That is, it can be an unforgiving market to trade, right?
Oh,
I really think, 50 $50 ranges in gold most days. Trading micros, great case for trading micros in those markets.
yes, the
Uh,
micros do work. Uh, I forget to take trade micros. I I used to trade them, and I thought, man, it's for me. It was teaching me the wrong risk parameters.
okay,
I was giving my chart too much room to move. I was I was not working on precision.
got you.
I was just trying to get in. And so for me, that didn't work at all. That just wasn't good for me. And then I ended up, a lot of fees when you trade micros
Yeah.
in the real space. So um, I just said, hey, I'm going back to live live minis, and I'll do it that way. And between trading my live accounts and working inside Topstep, it's just easier.
Yep.
It's easier.
Absolutely. I know you did want to go over crude oil, Anne-Marie. If you want to switch over there, we can take a look. And I see some traders talking about it in the chat. New feature on TopStep X, OCO bracket orders are available now. So we will take a look at that as well. Again,
Yeah.
this is my first time looking at TopStep X this weekend, I will admit. The amount that you guys see us on Topstep TV, yes, sometimes we do take breaks, but we will take a look at the OCO brackets. Want to explain those, but what are you seeing in crude oil, Emery?
All right. So That tells us what's going on with crude right there. Yeah. So I think we're landlocked still. But we definitely are holding a floor. If I were forced to trade, and see, so I have traded oil last week, but I only traded it when it came to the bottom of the range and got out when it got to heavy congestion. I did not want to try and trade it up and out. I did not want to try and trade it down. And, it looks like it's a wedge, right?
It does.
So when I'm staring down a wedge like this, where I have lower highs and higher lows, it's telling me the traders are in some kind of war, right? And so I'm going to look to the volume again. I trade literally the same way. I mean, I will use some indicators, but volumes really become my jam because it literally tells me where the traders are going to move. For instance, let's just look at a little lesson. If you stare this, that's the biggest candle, and it's been the biggest candle for that day, 2, 3, 4, 5, 6, right? And this is the 7th day. And so here's the storyboard. Here's the close of that candle. That's going to be important. The open of the candle is going to be important. And the high and low are going to be important. And so if I'm looking for trade, I'm going to say, all right, that's a big volume candle. I'm going to see if it holds over the close. And then I'm going to guess that it's going to go into the point of control, into the heavy congestion, or into the top of the wick. And that's how I'm going to set the trade up. So from the big picture, I can then go to a 30-minute chart
Order filled.
and say, all right, I'm obviously still inside that range. The high volume candle, take a look at this. I mean, it's doing, that's where we're sitting right now, right? We're inside of that. We've got momentum that's a little bit negative. We've got a negative trend. So, I mean, if I were a betting man, I would put a short there, right? And I would try, once that fills, I would take it back to the halfway mark, which would be, 20 cents or something, right? And if it heads lower, great. But my thought is, trend is down. Here's where the big volume is. Bounces into the top of the volume with trend being down, should be another downside formation into yesterday's low, potentially. But I'm just going to use the halfway mark. I use that 50% just like you. What are you thinking about this one?
So let's take a look at gold. And Chad, if you heard an order filled, don't worry, that was mine. I was just placing a test order for these OCO brackets so we can kind of demonstrate them again. I'm going to be doing these live with you guys and trying to figure it out. That was my order filled though. Don't worry, everyone freaked out a little bit, Anne-Marie. Let me switch over to my charts and take.
Perfect.
So taking a look at crude on a daily time frame, it has been in the very range bound. Right, there are 3 moving averages that I look at: the 20, the 50, and the 200, and they're all within 75 cents of each other. 60 cents of each other, which is telling us that this is just a very range-bound market. But I also think that crude intraday has been one of the best trading markets that we've had.
Yep.
You know, we have, you know, we trade up to about $64, somewhere in there, and it's a decent spot to start looking to sell. And when we trade down near 62, 61.50, it's a decent spot to start looking to buy. I think a lot of the price action has been happening during the Europe session, where a lot of the volume comes in early. If
You
you're
mean
awake,
4 a.m.?
yeah, 4 a.m., 3 a.m. Eastern time. You know, right around there, we see a decent amount of volume. A lot of times, that's been the extreme of the range. So looking for opportunities there, but you know, intraday, if you're a range trader, I think crude is where you want to be. Where especially if you're more of like an intraday swing trader, you want to put on a position, let it work. Crude has just been presenting great opportunities to do that. Now, the minute I say that, something's going to come out, a headline's going to come out and change crude oil. But for the last, you know, we can call it the last 2 weeks, maybe even a little bit longer, we've been in that $2 range, and you know, it's a decent range to trade.
So now that you have given us that range, what top three candlesticks are you looking at to execute?
So I'm looking at more so I'm looking at 30-minute candles, Emery.
Mhm.
Looking at 30-minute candles, looking for something like this, right? So we have this 30-minute candle here, ton of high volume. The range is 62.59 down to 62.20s. If we close a 30-minute candle above this range, I'm looking to go long with risk below the low,
Ah, okay.
right? And in this case, like in this case, we had another high volume candle. In this case, we had another high volume candle. It's up at the highs of the range, right? So anything near 64s, I'm looking to sell. We had a high
Mhm.
volume candle up near 64s. I'm looking to sell up here, right? Here's another, you know, so anything in this range where we didn't
Mhm.
close above the high, we actually closed below the
Mhm.
low, right? If I attach VWAP to that high volume, flows to the downside. I'm looking to get in here because anything up near 64 looks like a decent opportunity to sell. So I'm still going to use 3-minute charts as well, because a lot of times we'll see that, you know, we'll see something like this. High volume spike on a 3-minute candle will close below it to just give me better trade location. But anything near 64 that shows a reversal pattern, I'm looking to take that trade.
Fair enough.
And no liability by Jay on anyone's trades. Again, we say it all the time. What we say here is for educational purposes only. I'm going to go find that risk disclosure. It's already posted in the chat, Bruno, with the second message in the chat today with that risk disclosure. Please take your own trades. I know everyone's joking, but we do have to say that.
Bruno's awesome.
Take your own risk. Bruno's amazing. Amazing. All right, Anne-Marie. I think I figured out the OCO bracket orders.
Let's do it.
So why don't we do a little bit of a demonstration of those? So like we said in the chat, you know, some people are already seeing it in the chat. There are a new stop type available with on TopstepX, and there's your OCO bracket orders. It's been heavily requested by a ton of people, and for good reason, right? The way the risk management features work right now in TopstepX, if we switch these to position brackets, it's going to be a bracket for the entire position, right? So let's say, you know, a lot of times, and these are more so for traders who are putting limit orders out there in the market and then looking to get filled. If I put, let's say I go a limit buy here, and then I want another one here and another one there, right? When this one gets filled here, it's going to set the way my stop is set right now, which is risk $500. It's going to set a $500 risk on this position here, right? So it's going to put a stop somewhere, you know, 25 points below where I'm at. So this order here is now below where that stop is. This trade is going to get stopped out. This one will not get tagged in, and then set another order here, right? So with the OCO brackets that we have, you know, you're going to click on this little icon above, you know, it's hovering over your chart right now. You're going to click the gear and switch to auto OCO brackets. And Gabe is going to do another example of this tomorrow during the daytime show. But I can switch to auto OCO brackets. Auto OCO brackets, come on. Oh, account must be fully flattened before you switch. Okay, there you go. So got to cancel these orders
Yeah,
first.
I just did that. Yeah.
Yep.
I had to flatten my oil so that I could set them.
So we are learning in real time here, all right? So switch to auto OCOs. Your account has to be flat. I just got that message. Don't ignore that message. And then you can set brackets, right? If anyone is traded on, there's a bunch of other platforms that you can do something similar. So I'm going to call this bracket $400, right? So I want to risk, I'm going to, actually, let's call this one 400 2-to-1. So I'm going to risk 400. And you can change the stop loss type, right? So as default, it's set to ticks. You can change it to dollars. I know a ton of traders are asking for tick-based stops. I'm going to change this to dollars. I have is 400 2-to-1. So on that one trade, I want to risk 400 to make 800. Right? I'm going to create and close. So now you can see up here, it says OCO bracket off. I had already created another one, which was $200. But this one is now the $400 2-to-1, right? So I'm going to say $400 2-to-1. My OCO bracket is set to that $400 2-to-1, so I know what I'm risking. And then if I mark it buy, it sets the stop loss and the profit target. Now, let's say I want to scale in back into a position or scale in and add up here. And I want to add here, but on my add, I only want to risk, and let's check the settings. On my add, I only want to risk $200. I want to risk $200 to make 100. Right, so stop loss 200, take profit 100. They update. I'm going to switch this OCO from 400 2-to-1 to 200. I'm going to mark it in again. And now you can see where the stops are for that position. So now these orders, the wider orders that we see here, are the orders that were set on that original bracket, right? Those were set on the 400 2-to-1 bracket. The closer orders are the scale in, right? So I'm only, on my add, I'm only risking 200 to make 100. So if this gets stopped out, I'll be back down to one position, and these orders are still going to stay up there. When we were doing the position brackets with Topstep X, that wasn't the case, right? Where you had to have a full out for the entire position. So this is much better for traders who want to scale in and out of trades.
Yeah, I love it. Super excited about this ad. So needed.
Yeah. For traders who want to do trailing stops. Okay, so here we go, right? We just saw I got tagged out of that trade. Now I'm back down to one, but these orders still sit here. Now remember, there was a closer stop order below the market here. That one is now gone. Now, if you guys have been trading on Topstep X for a while, you know exactly how the position-based brackets worked, right? And that's not the case, where I kind of have to manually manage the position if I want to scale out. But TraderX, just play around with it. I would say play around with it in a Topstep X practice account, and you'll understand it. And hopefully you just saw what just happened, right? I added a contract. On that contract, I was only looking for $100 and risking 200. But on this full position, and with this runner that I have now, with this runner, I'm comfortable risking $400. So I could now get back in here, say I market buy another one. On that ad, I only want to risk 200 to try to make 100 as this market is pushing up. Right? So on my ad, I don't need to risk the full whatever this is, right? It would be yeah, this is an amazing tool. Amazing tool. I know if anyone watched Dakota trade, when he was trading on NinjaTrader before we moved everything over to Topstep X, this is exactly how he would trade. So it's not something that I use personally, but I could understand why traders want it, and it might be something that I look to use in the future, just scaling in and out of trades. Yeah, definitely trade. And anytime you're doing anything new with your platform, don't do it with real risk on the line.
Yeah. Yeah. Okay, so it's about time for us to wrap up, but I wondered if we could leave everyone with a little bit of a psychology boost, as it were, in terms of trading in the market. We know the market's a head game because we've been trading it. We know it's a head game. What would you say to the trader who is caught in the cycle of the churn and burn?
That's a great question because I've been in that cycle more times than I'd like to admit that I've been in that cycle. Um,
Yeah.
and it really is slowing yourself down, but then also having confidence that you know more than you think you need to know. I think a lot of times what happens with churn and burn, it kind of feels like, hey, there's no way out of this, and we just try to push, right? Almost, and I've done it, Emery. You kind of take an apathetic approach to trading, where you're just like, I really don't even care what happens. I'm just clicking buttons at this point. If you're
Yes.
there, the best thing to do is just to stop, and stop, kind of reassess why you're even doing what you're doing. If you're actually trying to pull money successfully out of the markets, or if you're kind of just, taking something else out on the charts. Uh, Usually when that happens, the market's like, yeah, come on, keep doing it, give me more, because we need to feed off of somebody's, lack of discipline. So if you're in that space and you're in the churn and burn space, pump the brakes. I don't know how many people in this space, and Coach Ray and I used to do a class where we told people to no longer buy Topstep accounts and just trade the one that they're in. Most people are going to say, hey, you know what, just buy 10 more accounts for 97% off and you'll make it one day, kid. And it's just like, that's not the case.
Yeah.
You really need to slow yourself down, and ask yourself whether or not you're willing to really do the work that it takes to be successful at this. And if you're not willing to in the moment, I think it's okay to just be like, hey, you know what? The markets are always going to be there. I'll come back when I'm ready to mature as a trader. Um, if you're if you feel like you are in a place where maybe you're not taking profits or you're not taking payouts, or things are going really well and then you hit a point where you hit a wall, um, a lot of traders and some of the VIPs that we have at Emory, I polled the VIP group that I had, and I asked how many traders have taken one payout from Topstep, and most didn't. Then I asked how many accounts they're trading, and most are copy trading 5 accounts, right? And it really is, hey, slow yourself down. You're thinking too much about the money and not about the process. And if anyone
Yes.
is in that space, slow yourself down. And again, I think I would say that anyone who's on this stream watching right now has been doing this for 6 months or at least, enough to make us a winning trade. Right?
Yeah.
And then
Totally.
everything is about how you go about the process of being a trader, right? That's planning what your freedom looks like. That's planning what sitting on your hands and waiting for your opportunity looks like. Uh, because your system, if you've practiced it enough for the last 6 months, is more than enough to place a winning trade.
Yeah. 100%. The thing I would add to that is when you find yourself having a lot of combines or resetting all the time, you're really just creating an escape hatch that does not exist when you've got a live account. When you've got real money at stake, you can't hit the reset button. So you're learning all kinds of very bad habits. And that's important to realize that what you're doing is bad habit formation and it's not going to get you to the next step. So as we bring market kickoff to a close, just remember the goal in sim account, which is what a combine is to learn. So my thought is, when you get invited to a real combine, somebody's seen your skills and they're like, oh, all right, let's see if these guys can do X, Y, or Z. But being in sim is more like being at a training camp where you're building skills. And then when you get to your XFA, that's the real combine. But what a lot of us are doing is that we pass combines in a real rush because we're thinking about payout, 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 payout. when what we should be thinking about is processing. Every single coach, we sound like broken records because we're all saying the same thing. Just remember, it's about the process, and the reason we get the XFAs and can't take a payout is because we don't slow our roll. Because really, here's the thing. When you get a combine, you're always thinking, I can hit the reset button. I can hit the reset button. And your parameters are pretty wide. When you get to an XFA, those parameters do this.
Yep.
And when those tighten, you've got to slow your roll even more while you're developing your process. And so that's very, very important. I kind of wish we could almost reverse that, where you make it really tight in the combine, and when they learn to operate in the bumper cars, then widen it a little. But it is what it is. So we have to work with that and realize that passing the combine is great, but if you haven't learned the rules or refined your process, or Jay said it very succinctly a moment ago, you've got no discipline, then he didn't actually say you've got no discipline. I'm paraphrasing that. I'm the one that actually said that. But when we don't have self-discipline, we're going to blame blowing up the XFA on something else when it's really as simple as, not that it's easy, but as simple as following your process. So
Right.
that's my diatribe. Jay, thanks as always for being my study partner here. Market's going to be interesting this week. Watch your risk, watch the volume, and, don't play in the pool if you see alligators swimming around in there. Just not smart.
Yeah, definitely not. Definitely not. And Emery, always great being on with you Sunday evenings to prep for the week. See some traders in the chat saying, "Hey, can you explain the difference between OCOs and the normal risk settings?" I would definitely check in with Dakota for slow markets. He's coming up in about an hour and a half. That is a trade style that Dakota day in and day out. So check in with Dakota. Again, they are a very useful tool. We do have to end this session here, but there was one question real quick. I'll answer that. If you hate the OCO orders, just switch the same setting that you switch. So up here,
Exactly.
manage OCO brackets, switch to OCO, or
Disable.
switch back to position brackets. But Anne-Marie, great session as always. We will catch you all sometime this week. Play
Yeah.
well, manage